Welcome. We're so glad that you could all join us for Beyond Out of Pocket, Creative Strategies to Pay for Evaluations and Treatment. I'm Ann Helmus, and I'm the founder and the director of NESCA. Um, and at NESCA, we're well aware that evaluations and intervention services can be life-changing for children and families. But we also know that accessing these services can feel really overwhelming, both emotionally and financially. And this is particularly true in the past decade or so, where the costs for behavioral health care have risen far faster than general inflation. And inflation's been bad enough. And some of the reasons for that are that utilization of behavioral health services has gone way up, particularly since the pandemic and particularly since telehealth became available. There's been a shortage of clinicians to meet this increased demand and increase in wages for the clinicians that are there. And health insurance reimbursement has not kept up with the increase in costs for these services. And so as a result, many practices have stopped accepting health insurance, which shifts even more of the burden over to parents. Unfortunately, we can't control all of these factors in the economy that are influencing behavioral health services. And we can't make our services less expensive without cutting quality, which we would never do at NESCA. And what we can do, though, is to try to make these services more accessible. And so over the last 6 months or so, we've been on a journey to figure out how we can make healthcare services at NESCA more affordable, more accessible for families. We have continued to accept Blue Cross Blue Shield insurance as one possibility, which you'll hear about later from Henry Jimenez, who's our business manager. We have partnered with Carolina Rojas, who has this very innovative app that helps parents access their HSA and FSA accounts, and she'll be explaining all of that. We've partnered with Bo Leslie to provide a credit card that allows for 0% financing for these services for parents. And we've consulted with Leo Rotman, who's a financial planner specializing in families of children with special needs, into how we can take advantage of changes in the law for the use of 529 plans to fund these kinds of evaluations and treatments. So hopefully some of these new financial tools and changes in the law can benefit parents who are on this call so that it will be easier for you to afford evaluations or treatments that your child may need. Can we switch to the next slide? Sorry. Okay, so we'll start off with Opus Health and the HSA FSA.
Hi, everyone, and thank you, Anne, for that wonderful introduction as well. So just some context into Opus Health, like our mission, as Anne had mentioned, really aligned with what NESCA is kind of focused on today. Our mission is to help make healthcare payments more affordable, and to make sure that no benefits dollar is left behind. And so we do this with a couple of different ways, but we primarily provide transparency into what services are covered. We highlight the best way to pay using these tax advantaged accounts. And we're automating parts of the process that families find the most frustrating, which include the eligibility checks, reimbursements of HSA, FSA dollars, and gathering letters of medical necessity, which I'll dive into more so as well. We're really thrilled that NESCA is the first neuropsychology company in the country that's really embracing this new model for evaluations, and is being a pioneer in that sense of helping families really unlock these savings. And why does this category matter? It's primarily because when used effectively, these HSA, FSA accounts that are becoming more and more prevalent, they can save families anywhere from 25 to 40% compared to paying with just cash. And so we're by proxy helping unlock that. And we have a team with deep expertise across healthcare affordability, AI, and financial services. So we're kind of bringing together the best of both worlds, of all worlds, really, to solve this challenge. And I myself, for context, decided to go off and solve this challenge after being a predominantly healthcare benefits investor, because I particularly felt this pain point after my husband was diagnosed with a severe autoimmune disorder. It wasn't until I met with a benefits advisor that I realized I'd missed out on thousands of dollars in out-of-pocket savings by not using my accounts effectively. So, the goal is to help others, not be in my shoes and not maximize on the accounts that they're eligible for. And then with the next slide, I can dive into a little bit more on the HSAs and FSAs. So for high level context, what exactly are these accounts? HSAs, they're a saving account that is tied to predominantly high deductible health plans, although regulatory aspects have changed and expanded what type of health plans they can be tied to, which I'll chat more on in a second. But you contribute pre-tax dollars, and those dollars can be used for eligible medical expenses. Importantly, these HSA funds can roll over year, so they effectively work like a healthcare nest egg. What's really powerful about HSAs is that they're the only financial product that's triple tax advantage. So your contributions go in pre-tax, they grow tax-free, and upon withdrawal for healthcare expenses, they're also tax-free. But the nuance there is to make sure you have all the proper documentation, receipts, any very specific documentation details to be able to get your reimbursement in arrears. So you can say in 10 years from now, if you want to go back and reimburse yourself for certain things, having that documentation is really important. And then FSAs, they also use pre-tax dollars. The nuance is that you use it or you lose it. So you have to spend a certain amount of funds every year they expire, and they're typically employer sponsored. What can be covered by these accounts? Quite a lot, and it's growing every single year. At Nesca, family can really use them for the neuropsych evaluations, a lot of the assessments, and even for counseling and coaching, as long as a letter of medical necessity is created. And to access the benefits, there's really a couple requirements. So letters of medical necessity, which really requires sign off from your provider saying, there is a specific diagnosis and this is why, we're doing coaching or counseling or continuous treatment. The second is an itemized receipt. And then the third is claim form and information so that you can submit it really seamlessly. Although this might sound complicated, that's basically what we're here for. And we can guide everyone step by step, create the paperwork as well, depending on your administrator, auto-populate some of that information so that it's a much easier, simpler process. And then with the next slide, want to touch on, very briefly just on the savings dimension. So depending on your tax bracket, again, these vehicles can save you anywhere from 25 to 40 cents on the dollar. They historically, unfortunately, families have missed out on these savings. And a big reason is because of the documentation and reimbursement process. Americans today, we forfeit about $9.7 billion in unused FSA funds because people forget about them. They, upon reimbursement, they might get denied because they don't have all the information that's needed. And then there's also, billions more that are sitting in HSA funds that people also forget about and underutilized. So that's why we're here. And in fact, and we're really excited to announce this, our widget is live on Nesca's website. So if you go currently to the Nesca payments area of the website, you can utilize our platform for a couple different things. So one, you can check if you're eligible to open an HSA based on the type of insurance you have today. You can see also exactly what services are eligible and what is the required documentation for that. And you can also download the reimbursement forms. We have a lot of the core administrators that are very prevalent across the US. All of the relevant reimbursement forms and letters of medical necessity and documentation that you need. And you can kind of go through that, download it, and we can direct you exactly how to submit it so you don't miss out on any of those dollars. So feel free to go on the site. We also have a savings widget so you can see how much you can save depending on the service being done. And then last but not least, with the last slide, I would be remiss if I didn't mention that healthcare affordability and accessibility are luckily top of mind for regulators today. And in fact, we saw just this past July, more regulations were passed, which one, increased the contribution limits to the HSA, HRA, and other tax advantaged accounts. Second, they also expanded eligibility to more insurance plans. So now ACH bronze and catastrophic plans starting in January will be eligible. And then lastly, different membership-based care is now compatible. So there's kind of an expansion of what we can utilize these funds for, which is extremely exciting. But yeah, that is a broad overview. Again, I encourage you all to check out the widget. We also, through the eligibility check, we're partnered with Lively. So if folks are eligible to open up an HSA, you can open up an HSA through our partners at Lively that are very tech forward, very patient focused. So yeah, that is a bit on Opus and how we're here to help.
Carolina, also in our partnership, we're going to be streamlining the letters of medical necessity, right? So if your child has had a neuropsych evaluation and we've recommended coaching, for example, the letter will be sent directly to the neuropsychologist to sign off so that you've got a signed letter of necessity. Is that correct?
Yes, yeah, that's exactly right. And today also, folks, you can essentially like fill out the patient piece of the letter of medical necessity. And then we'll have that on file, and we work behind the scenes with Nesca to make sure it's all kind of written, and the diagnosis, everything that's kind of required is included.
Great. Wonderful. Um, let's move to the next. And um, sorry, so Bo Leslie is going to talk to us about the credit card option.
Yes, so I'm from Advanced Care. I started this with a couple family members in 2008. We're based out of Tampa, family run, a little bit more than family run now with all the employees we have, but we offer patient financing for medical needs for individuals and their families. And when we started this, we were trying to make it affordable, and we were seeing what everybody else was doing in the medical financing world and trying to make it a little bit more fair. Uh, Go ahead and jump to the next slide. So what we offer now, a lot of people have deferred interest. Deferred interest is great if you pay it off during that time. We offer actually 100% true interest-free financing for those who qualify. And what that means is with deferred interest, if they don't pay it off during that time, it goes retroactive to day one, usually at a high interest rate. Our true 0% interest financing is exactly that. So we offer 15 months true 0% interest financing. Whatever is paid off during that time, they don't pay interest on. You don't pay anything um, on those that dollars that are paid off during that period. If you have a remaining balance after that 15 months, you only pay interest on that remaining balance. And it starts at 17%, goes all the way up to 28% on that remaining balance. And so, versus a lot of our competitors out there, that's very unheard of. And so, we really have tried to make this very fair for the patient and their families. The one thing we also pride ourselves of, if a patient's family can't qualify, for example, and the grandparents are willing to do the financing for that family, we will allow that. A lot of finance companies will not. The patient or the guardian has to be the applicant. That is not the case. We have family, we have friends, whoever can qualify, we will allow. We also have a sub-program of our advanced care program called My Medical Funding. Those are the people that don't qualify for the 0% financing. These are traditional loans. We work with about 30 different lenders on the back end of these to help support us to try to get as many people qualified as possible. Interest rates vary based on the credit profile of patients. This one allows for co-signers. And so a lot easier to get approved for. It goes all the way down to around 580 credit score. So what we've really tried to do in the medical finance world is make it more fair for patients and their families and make it more accessible by allowing other people outside the family that are willing to take on that burden or responsibility with the family and allow them to be involved so these people can, so everybody can get the care that they need. And so I know it's not sexy and everything else, but that's our financing product that we offer, and we hope it can help people.
And in our partnership with Bo and his group, you can apply directly through our website, correctly?
Yep, you have a banner on ours that goes to our website to apply. Correct.
Yeah. So again, go to the Nesca website and you can apply. Thank you.
Yep.
All right. And we turned to Leo Rotman when we heard that there were some significant changes in how families can use their 529 plans because Leo has specialized in working with parents of kids with special needs over many years. And so he's going to explain how you might want to access the 529 plans to pay for some of these services.
Thanks, Anne, and thanks for having me today. And nice to be here this afternoon. Just to tell you a little bit about my background and my company. I've been doing financial planning for almost 25 years and started focusing on special needs planning really significantly, probably about 15 years ago. I have a son with autism who's now 25 years old, and that's kind of what got me started on that journey. Wanted to make me help other families. Our firm today really works almost exclusively with families that have children with special needs to help them with really holistic planning. And one of the tools in our toolkit are 529 plans, and I'll talk to you about those in a second. But often, it's kind of a balancing act between looking at, what are the long-term goals families have and balancing those the immediate needs of today. And because most families, I think probably every family has a limited amount of resources, we always try and help families to make sure that they're using those resources as wisely and as efficiently as possible. So if you can go to the next slide, please. So there's a lot of information here, and I just want to take a step back and tell you a little bit, give you some kind of, I guess, historical context about 529 accounts. I think most people are familiar with them. The first 529 plans, the ones on the left, 529C, have been around for decades, since 1996. That's when they were first introduced, and they pretty restrictive. They were set up, or the legislation was designed by Congress to allow families to save for higher education in a tax efficient way, which means that you take money that you've already paid tax on, you could put it into one of these accounts, and then you could use it for basically cost. And in my planning with families, especially families with children with special needs, there's a lot of pushback because there's questions about whether or not your child's actually going to go to college or not. So a lot of people didn't really want to use these plans because they were very restrictive. Even if you don't use it for college, but the penalties and there's some taxes. So there really wasn't a ton of use for them within our population. Over time, they became less restrictive, and you were able to use the money for different things, but still education. So because of the actually, I think a few years ago, they allowed you to use the money for private schools, for not just higher education, but for primary education up to $10,000 a year. But a big change happened back in 2014. For many years, there's a push in Congress to try and create some legislation that allowed these accounts to be used for persons with disabilities. And in 2014, ABLE accounts began. ABLE accounts are called 529A accounts. So you can see there's 529C and there's 529A. And 529A accounts are for individuals who have qualifying disabilities, which means that their disability started before the age of 26. That's changing. So next year, it's going to go up to the age of 46. And like a 529C, which is the college version, you can put in $19,000 a year. And with a 529C, the college account, multiple people can put in $19,000 a year. So I could put in 19,000 for my son. You could put in 19,000 for my son. Anybody could put 19,000 for my son. So the numbers can be pretty big. With an ABLE account, that's limited to $19,000 a year total. And this figure gets adjusted with inflation every year. So next year, it'll presumably be a little bit higher. Because of ABLE accounts, the use of these funds broadened. So unlike a 520, which is really primarily education focused, and with the OBBB, that scope of use broadened even wider. So not only can you use it for education, you can use it for primary education, you can use it for for like SAT, you could use it for getting certificates, in different kinds of degrees, but it really is still education focused. An ABLE account, on the other hand, can be used for really a variety of things, including obviously education, but it could be used for therapies. It could be used for almost anything that's going to improve the quality of your child's life, other than really like or trips or vacations, but there's really a variety of uses for it. So the way that we're using the two accounts for planning purposes today is, we encouraging folks to put money into a college plan because the limits are much higher than with an ABLE account. But you can enroll money from a college account into an ABLE account and use the money for more things if you need to use it for other things. The limit is still there, so I can't take all money and put it into my ABLE, but I could still move $19,000 a year from my college account into my ABLE account. So you could think of the college plan, it is, maybe it'll be used for college, maybe else. It's more of your long-term savings, whereas the ABLE account is something that you can utilize day to day or month to month, year, more like in the short to intermediate term. Both types of accounts have tax-free growth. And if you go to the next slide, let me see what it says in here. But with the college account, if you end up having some money that is still locked up in there, now with the OBBB, you can move some of that money into a Roth IRA. So it really has a lot more flexible, especially if you have a child with a disability where you can have the two accounts. And I should just reiterate that if your child does not have a disability, before the onset of, now it's going to be 46, then you're not going to qualify for an ABLE account. There are a couple of drawbacks to ABLE accounts that we're hoping will go away eventually. One of them is that if you exceed $100,000 in the account, your child will lose SSI if they're getting SSI. And if you access Medicaid or Mass Health in Massachusetts, so if your child's using Medicaid, Mass Health, and they were to pass away with money in the account, Mass Health can back or recoup the money that they've paid on behalf of your child. So again, both are great because they have significant tax advantages. It's tax-free growth. It's after-tax dollars, but tax-free growth. And both accounts, you can really use them in conjunction with each other to pay for a variety of expenses. Thank you.
Excellent. Um, and then we have our own Henry Jimenez here at Nesca. And just briefly, Nesca is a practice that was founded in 2007 by me, and we now have about 25 clinicians across our various locations, the main ones being Newton, Plainville, Hingham, and then Londonderry, New Hampshire, and most recently Coral Gables, Florida. And as many of you may know, we offer a wide range of services from neuropsych evaluations to post-secondary transition assessment, planning and coaching, executive functioning coaching, parent coaching, counseling. And we have remained committed to accepting health insurance because health insurance will cover part of the costs for neuropsych evaluations. And we work with a medical billing company to make sure that you are getting the maximum benefit out of your insurance. And so Henry will explain a little bit more about how that works. You're muted, Henry.
Apologies for that. Uh, Good afternoon, everyone. Again, my name is Henry. I'm part of the billing team here at Nesca, and I just wanted to briefly go over how Nesca's billing procedures work, and primarily, of course, for the neuropsychological evaluations. Here at Nesca, as some of you may know, we do fully comprehensive evaluations, which include two portions, the educational assessment and planning portion, as well as the medical portion. Nesca submits the medical portion directly to your insurance carrier, and as Ann mentioned, we currently only accept Blue Cross and Blue Shield and Anthem. And we work very, we work very diligently so that our clients can extract the maximum value from their insurance plan. And we do so by filing timely claims, obtaining the necessary prior authorizations if they're needed, and actively pursuing all appeals for any claims denied. Your individual plans obviously will determine your coverage, for the evaluation, and as well as your patient responsibilities. For example, copays, deductibles, co-insurances, things of that nature. And this, of course, will be due to Nesca. Once all of your claims have been processed and submitted, we will collect any balance due for the medical portion. But again, that is only after all of the claims have been processed by them. The educational portion, unfortunately, is not submittable to insurance because by its very nature, it's not considered medical. This portion is broken into 3 separate payments, and only the deposit is due at the time of scheduling in order to hold your scheduled dates of service. Any additional questions you may have for the Blue Cross and Blue Shield portion / Anthem, you can feel free to reach out to me via email and also through our website. You can reach out to the info at Nesca, and I'll be happy to answer any questions. And I just wanted to say thank you for taking your time to be with us, and happy to be of further assistance when needed.
Thank you so much, Henry. So wondering, there was one question that was raised about whether the slides will be available, and I assume that the answer is yes. All the panelists are okay with us sharing. Great. So Jane will make that available to everyone. There's a lot of great information on these slides. Are there any other questions that people have? All right. If anybody does think of questions after this presentation, we will make the slides available. So contact information will be there, I believe, for all of the panelists here. And so you can reach out if you have questions about the 5. Whoops, here's one question. Do you have a guesstimate of how many claims get accepted or denied? Henry, maybe I'll start and then have you jump in. So we try to work closely with you to let you know ahead of time what's likely to happen. So for reasons that I don't completely understand, Blue Cross Blue Shield thinks that having an evaluation to determine if your child has autism is a medically necessary evaluation, but having an evaluation to determine if your child has ADHD is not medically necessary. And we don't know why this is their distinction, but it's their distinction. And so what we try to do is to have the intake coordinator or Henry work with you to help you understand what the likelihood will be that your claim will be accepted or denied. Because we know certain diagnosis codes, if you're coming in because your child has dyslexia, Blue Cross Blue Shield will most likely not cover that. If the question is a communication disorder or autism, Blue Cross Blue Shield most likely will cover that. So, and yeah, so Henry, do you want to add anything to that?
No, just because you're asking exactly how many are getting denied or accepted, with the exception of what Anne explained, which is obviously the learning disabilities. Pretty much over, I want to say, a good 90% to 95% of our claims are approved initially. And if there are any trouble with the actual denials, we will continue to pursue through Blue Cross and Blue Shield, and if necessary, with your assistance. But the majority of the time, we do handle it directly. If there is any additional things that might be needed, information that is obviously required from the families, we will reach out to you and do so. But we have a very low denial rate when it is diagnosis related and it's not related to nonverbal, or I'm sorry, learning disabilities.
Great, thank you. And we try to do everything that we can to help you. And so we have kind of a well-oiled machine for how prior authorizations get done in terms of Henry getting information he needs from clinicians and so on. And Henry is extremely responsive. So we try to partner with you until the bitter end if you're in a dispute with Blue Cross Blue Shield and get things covered. Another question is, do we accept school district funding? And the answer is we do accept school district funding, but we do not accept the rate setting rate. And just to explain that, school districts under many circumstances have to pay for an independent evaluation, but they only have to pay at what's called the state rate or the rate setting rate. And the rate setting rate is about half of what our rate is at Nesca. And so we are not able to accept that rate setting rate, but we often will contract with school districts who are willing to pay our higher rate because they know that they're going to get a good evaluation and it's worth it to the school districts to contract for that. So it definitely is worth, if you have an advocate or an attorney working with you and you want to come to Nesca, to push on your school district to fund it at the full rate. And many, many school districts do contract with us at our full rate. There is a question about whether health insurance, I think this is whether health insurance is covering anxiety or emotional disorders. And Henry, I would say that is one of the categories that they tend to view as medically necessary. Is that correct?
That is correct, yes.
So, so the answer is yes, you are likely to get coverage. And one of the things also with insurance billing is that even if we don't know what the diagnosis is, that's the reason why you're coming for an evaluation. You can get coverage based on what they call rule out diagnoses. So for example, if your child is showing signs of autism, but you don't know if they have autism, we would put the diagnosis as rule out autism, determine if they have autism, and it would likely be covered. If we say rule out dyslexia, it's not going to be covered. Let's see. And I think a question in the chat, maybe. If you want to mention, we also do partial. Yeah. Okay. Is there, Jane thought that someone had their hand up. Is there another question? Where did we get? Oh, here, I'm sorry. I need to scroll down. What about when you have a high family deductible? Due to a high deductible will not pay for evaluation and it's $3,000 out of pocket. That is true. And these insurance plans now that have these very high family deductibles, if you haven't met that deductible, then you will get the receipt from Nesca. And so the $3,000 or whatever the amount is that you have to pay, that would apply toward your deductible, meaning that if you had a $3,000 deductible and you pay $3,000, then you've met your deductible. So all other medical expenses that you incur in that year, you would have met your deductible. And so they should be covered at whatever rate your insurance covers it. And unfortunately, there's nothing that Nesca can do about high deductible insurance plans, as much as I wish we could. Would you cost share with the school district and parent guardian covering the rest? This is a little bit of a gray area. The answer is yes. We would be more than happy to cost share with the school district. I've been getting competing advice from attorneys and advocates about what the law says about that, about what the regulations say about that, about whether school districts are allowed to do that. And so, I guess if you're in that situation, please contact us and I will seek some legal advice on that to make sure I don't want to step outside step outside the regulations, but of course, we're trying to get this done. And so we're happy to work, in any way that we can collaboratively with school districts and families. Um, let's see. Other questions? Um, all right, so I encourage all of you who have interest in this to go to the NESCA website. As Carolina mentioned, the widget is up and running, and that allows you to put in information about like how much would the evaluation cost, and if you use your FSA or your HSA, how much are you saving? And Carolina, are there other aspects of the widget? Does it also allow you to access the 0% financing?
Yes, yeah, that's all it within the widget. So you can kind of click through if you're doing 0% financing and an HSA, what does that look like? And then all the links are there as well. So you can take a look at all those different tools.
Yeah, so we tried to make it so that it would be, very user friendly, with the idea that if you said, okay, the cost that I'm looking at is $5,000. If I spread it out over 15 months with the 0% financing, how much would I owe each month? And if I made that monthly payment out of my HSA, how much would I be saving? And so what then would be my effective cost for paying this? And all of a sudden you take a large number like 5,000 and you chop it down into a monthly payment that might feel more manageable. And also, if you use the tax advantage accounts, would actually cost less for you, or if you used 529 funds. And so again, you can play around with that. And Henry is one of the most approachable, accessible people I've ever worked with. So don't don't hesitate to reach out to him. And if he doesn't know the answer, he will put you in touch with whoever does know the answer. And we really want to work with you on this so that people can access services that are so important for their children. So thank you all for taking the time over your lunch hour today to join us. And feel free to reach out with anything else.